Welcome back to Market on Close. It's time for Overlooked Stocks. That means we're joined by George Tsilis, our senior markets correspondent. Now, we're looking at AppFolio today, a huge rally after earnings to an all-time high for them. They closed the day up more than 19%. George, give us the details on how their performance was for the second quarter.
Actually, it was quite good for this underlying business, and it is certainly an overlooked stock. This company is essentially a software as a service, a software provider, but their focus area is essentially real estate and property management. So, their software, which is being driven by artificial intelligence as they continue to grow, is really helping automate and economize and optimize on things like tenant screening and payments and accounting, as well as maintenance reconciliation. It helps also connect real estate investors with service providers as well as tenants and property managers all together. And it's a small and growing niche business, which competes with some of the other private companies out there, companies like Entrata and also companies called RealPage. But this company has been growing quite nicely over the past few years after it stalled out, going back to 2021 and 2022, when we actually saw a lull in some of the technology software stack areas of the software ecosystem. Now, there was a catalyst today that caused the stock to move quite a bit to the upside. They did post both EPS and sales, which were slightly ahead of estimates. They denoted around $1.38 EPS, higher by 23% compared to last year, where they earned about $1.12. And they also beat the estimates, which were $1.28 by 10 cents. The other thing is they did post sales higher than estimates at $236 million, 19% increase versus the $231 million from last year. I'm sorry, $230 million estimate, and again higher by 23% compared to the $197 million last year. The other thing the company denoted is they actually raised their top line sales guidance for the remaining fiscal year 2025 by about $10 million. But you actually look at the way they've been economizing on their software, they actually denoted about 6% increase in the number of new units that are under their program, around 8.9 million versus 8.4 million last year. Total customer count also grew by about 6.5% to 21,500 customers. But nonetheless, I think what's important is if you actually look at the customer growth and unit growth, which were in the mid-single digits, top line sales in total were 19%. So that's suggestive of the business actually generating more recurring revenue and more dollars on a per customer basis, which has been very margin enhancing for an underlying business, which if you look in the last year, net income margins for the overall business have grown pretty substantially to about 23% of sales versus about 12% going back just a few years ago.
And that top line growth that you just mentioned, that reacceleration up to that 19% with 16% last quarter, got them an upgrade today from Piper Sandler.
Correct. I think the analysts are going to be upgrading this stock with Piper Sandler moving their price targets to the upside. You're looking at the consensus as well. The high consensus right now is around 300 with the midpoint consensus around 270. Now, again, the stock is trading above those levels because they did reaffirm higher guidance when it comes down to earnings as well as top line sales. But I think the asset light model, the aspects also of about 96% of their customers utilizing some form of their new artificial intelligence to help optimize, work productivity and workflows from their software solutions is again margin enhancing. And the other thing is if you look at even the business right now, contingent upon estimates for EBITDA growth, last year was around 49%. Last 4 quarters, they're expecting 56% on a forward basis on about 23% sales. So that you see basically EBITDA growth twice the growth rate in sales. That's trend positive. But at the same time, the stock is trading at less than 1 times next year's growth at 44 times earnings. So one of the things I think that's happening here is that it's growing at a reasonable price. So the stock is moving contingent upon some nice earnings and sales, and the analysts also see this trajectory continuing as well.
Well, it was a sell-off, a broad sell-off in the markets, but a very good day for AppFolio. Thanks, George, for being with us to break all of that down for us.